Hello everybody, this is Simple Accounting Videos, and today we will say about balance sheet. Usually financial statements include balance sheet, income statement, statement of cash flow, statement of changes in equity, notes and other disclosures. Balance sheet is known as a statement of financial position. It tells about the assets, liabilities and equity of a business at a specific point of time, like a snapshot of a business. Also, it is an extended form of the accounting equation where assets are equal to liabilities plus equity. In the balance sheet, assets are listed on the left side of balance sheet in the order of their liquidity and classified to current asset and non-current assets. Similarly, liabilities are listed on the right side of the balance sheet in the order of priority for payment and also classified to current liabilities and non-current liabilities. Sometimes we use the terms short-term and long-term, but the meaning is the same. Then on the bottom of the balance sheet, equity accounts are listed. Owner's equity account, we use the term owner's equity if the company is a sole proprietorship, and shareholders equity if the company is a corporation. Let's look to the accounts of the balance sheets. Current assets are cash and the other assets that are expected to be converted to cash during the year. They are cash, temporary investments, account receivable, inventory, supplies, prepaid expenses, and non-current assets such as long-term investments, land improvements, buildings, equipment, intangible assets. Usually assets have debit balances, but contra assets have credit balances, such as loans for doubtful accounts, accumulated depreciation, land improvement, accumulated depreciation buildings, accumulated depreciation equipment, and accumulated depreciation intangible assets. Land is not depreciated because it has unlimited useful life. Then liabilities accounts. Current liabilities are obligations that have to be paid during the year. They are current portion of long-term debt, account payable, salaries payable, interest payable, taxes payable, customer prepayments, dividends payable, and others, and non-current liabilities such as long-term notes payable, deferred tax liability. Liability accounts have credit balances, except contra liability accounts, which have debit balances. Example of contra liabilities is discount on notes payable. Then equity accounts are listed. Paid-in capital and share capital. Paid-in capital is an equity account of owner's equity, and share capital is of shareholders' equity. Retained earnings account. Equity accounts, like liabilities, have credit balances, but contra equity accounts have debit balances. Drawing and treasury stock is a contra equity account. Drawing is a contra equity account of owner's equity, and treasury stock is a contra equity account of shareholders' equity. Okay, this is the end of the video. Thank you for your attention. See you soon. Goodbye.